What's going on, everyone? Welcome back to Cash Flows. My name is Wallace and I've been getting a lot of questions in my inbox, so I figured I'd just do a video for a lot of the similar questions. So I got a question from one of my clients and she asked, is it better to hold stocks long term or to sell when you make at least 10% profit? So it's a really good question that I've been getting a lot, and you know what? My personal opinion, I would go long-term investments. I consider myself to be a long-term investor, and there's several reasons as to why that is. The difference is short-term investing is when you're making short-term transactions, so you're not holding on to the investment too long. Long-term investment, of course, is like a buy and hold situation where you buy a stock and you hold it for like a year, 2 years, 5 years, maybe even 10 years longer than that, right? So that's the difference between long-term investments and short-term like trading and short-term investing. So number one, long-term investment for me is going to be less stressful. You don't really have to pay attention to the market every single day when it comes to long-term investing. Your decision on that investment won't really change day to day when you intend to hold the stock for 5 years or 10 years, right? So you're not really stressing over the fluctuations. That's something to expect anyways, but you know where your target is in the long term, so you're not really as stressed out in the interim. So that's one of the main reasons for me. With number two, like I kind of led to, you don't really have to make as many decisions. So when it comes to short-term investing, you're making more decisions on a more often basis, right? So you're not really making as many transactions when it comes to long-term investments. You're probably making a few good decisions and holding it long term. When it comes to short-term investing, you may be making several transactions every day or every week. So there's proof where you could actually invest and make very few decisions and make a really good growth on your investments. Some really good examples would be Apple or Microsoft. 20 years ago, Apple was about $1.56 per unit. Right now it's about $374 a unit. So you could really experience a lot of good growth from a few really good decisions. Now, one of the other main reasons as to why I think long-term investing is better is because it's less risky as well. When you're making more decisions, it kind of increases your chances of being wrong. So that increases your chances of losing money as well. And you'll see that there are a lot of traders or short-term traders that do lose a lot of money. In fact, most of them do. That doesn't mean you completely stay away from short-term investing. You can be a long-term investor and have short-term investments as well. One thing you gotta consider is there's different types of long-term and short-term investments. For example, I have a lot of long-term investments, some that I intend to sell 2 years from now, some I intend to sell 5 years, some I intend to sell 10 years. There's some I don't even know when I consider to sell them because I think that they're gonna be very profitable for a decade. And the same goes for short-term investments. You can be investing into something for a few months or even a few weeks. Some people buy investments and sell them in the same day. You kind of got to figure out what your comfort zone when it comes to short-term investments as well as long-term investments. What kind of long-term investor do you want to be? What kind of short-term investor do you want to be? And now another great reason as to why I think long-term investing is better is because it allows you to participate in getting dividends. Now, of course, dividends is when the companies pay out their profits to the shareholders, and the reason why they do that is to keep shareholders invested longer. That usually happens on a scheduled basis and is normally quarterly, which is like every 3 months, and you can't really participate in getting dividends when you're investing in the short term. Now also, when the dividends are reinvested, it gives it a compounding effect similar to what interest does. So that's something that you can't really experience in short-term investing. And you know what, like I said, I get asked this question a lot. I get asked this question very often, and I always give this one example. Would you rather have $1 million in the stock market, or would you rather have $1 million rental home that's paid off? I would rather have the $1 million rental home, and most people would agree with me just because it is a more secure investment, and usually the longer term investments are more secure, and in this case the rental property is a much more longer term investment when it comes to the stock market. It doesn't fluctuate as much. That's just like a clear-cut example that shows that long-term investing is the better investment. But like I said, figure out what your type of long-term investment means to you, and it is okay to be both a long-term and a short-term investor. So thank you very much for that question once again. If you guys have any other questions, please do reach out to me. I love answering your guys' questions. If you guys did like this Q&A, I will do other ones again. Please do like, share, comment, and subscribe to my channel. And once again, thank you for watching.